Scene script. Have you ever wondered why gold has been valued by civilizations across history and why it might be important for your investment portfolio today? Well, let's take a moment to delve into that. From ancient Egypt to the modern stock exchange, gold has always held a special place in the human story. Its durability, beauty, and rarity have made it a universal symbol of wealth and power. Gold was used as a form of currency by civilizations as far back as 4,000 years ago in Egypt and Mesopotamia. It was a tangible asset, a physical representation of wealth that could be seen and touched. It was, and still is, universally accepted and recognized, making it a reliable form of exchange. But gold isn't just a relic of the past. It's a modern financial tool that can serve as a hedge against inflation and economic instability. When the value of paper currency falls or the stock market becomes volatile, gold often holds its value or even increases in value. This has been true in every major economic crisis in the last century, from the Great Depression to the global financial crisis of 2008. And why might now be a good time to consider adding gold to your investment portfolio? Well, we're living in uncertain times. We're seeing unprecedented levels of government debt, questionable economic policies, and unpredictable market behavior. In such a climate, gold can offer a sense of security. It's a tangible asset that you can hold in your hand, unlike digital currencies or stocks. It's a way to protect your wealth from the unexpected. Of course, investing in gold isn't without its risks, as with any investment. It's not something to be done on a whim, but rather a strategy to be carefully considered and researched. But given its historical and inherent value, and the current state of the world, it's certainly worth considering. So gold has proven its worth over time, but how does one go about investing in it? Opening. Investing in gold isn't like buying stocks or bonds. There are various ways you can invest in this precious metal. Firstly, let's talk about physical gold. This is the most traditional way of investing in gold. Think gold bars, coins, or even jewelry. The advantage here is that you actually own a tangible asset. You can hold it, touch it, and store it. However, there are also downsides to consider. Storing and insuring physical gold can be costly. Additionally, it can be difficult to sell physical gold quickly if you need to liquidate your assets. Next, we have gold exchange traded funds, or ETFs for short. These are investment funds traded on stock exchanges. They're designed to track the price of gold. The benefit of gold ETFs is that they're easy to buy and sell, just like stocks. They offer a convenient way to gain exposure to the gold market without the need to store physical gold. However, keep in mind, with a gold ETF, you don't actually own the physical gold. Then there are gold mining stocks. These are shares in companies that mine for gold. The performance of these stocks is not only tied to the price of gold, but also to the success of the individual mining company. This means they can offer higher potential returns, but also come with increased risk. Lastly, we have gold mutual funds. These are funds that invest in a variety of gold-related assets, from physical gold to gold mining stocks. They provide diversification, which can help manage risk. But like all investments, they come with their own set of pros and cons. Remember, each method of investing in gold has its own set of characteristics and risks. The right choice depends on your individual circumstances, risk tolerance, and investment goals. Closing. Now that you know the different ways to invest in gold, let's delve deeper into the process. If you're a fan of tangibility, investing in physical gold could be the route for you. There's something about holding a physical asset that gives a sense of security and permanence, isn't there? Now let's dive into the process of acquiring this lustrous metal. First things first, you need to find a reputable dealer. This is a crucial step as you want to ensure the gold you're purchasing is authentic and fairly priced. Look for dealers who have been in the business for a while, have a strong reputation, and are transparent about their pricing. It's a good idea to compare a few dealers to get a sense of the market price. Remember, if a deal seems too good to be true, it probably is. Next, you'll need to decide on the type of gold you want to invest in. Gold comes in many forms, like coins, bars, or even jewelry. Coins are often a popular choice for first-time investors due to their smaller size and the variety of options. Bars, on the other hand, are typically more cost-effective for larger investments. The choice entirely depends on your investment goals and budget. Once you've made your purchase, the next step is to think about storage. While there's a certain appeal to keeping your gold at home, it's often safer to store it in a professional vault or a bank's safe deposit box. These facilities provide security features that most homes simply don't have. Plus, many offer insurance against theft or damage, giving you an extra layer of protection. But let's not forget about paperwork. Keep a record of all transactions related to your gold investment. This includes receipts, appraisals, and any documents related to storage and insurance. Having a paper trail is important should you ever decide to sell your gold or need to file an insurance claim. Investing in physical gold can be quite straightforward, but remember, it's all about doing your due diligence. Make sure to conduct thorough research, make informed decisions, and always keep your gold secure. These steps can help you build a gold investment that stands the test of time. If you prefer something less tangible but still want exposure to gold, gold exchange-traded funds or gold ETFs might be your cup of tea. Let's break down what exactly a gold ETF is. Essentially, these are investment funds traded on stock exchanges, much like shares of a company. They're designed to track the price of gold, meaning that as the value of gold fluctuates, so too does the value of the gold ETF. Now you might be wondering, how do I get my hands on these gold ETFs? Well, the process is surprisingly similar to buying shares of a company. You'll need a brokerage account first. Once you've set that up, you can purchase gold ETFs just like you would any other stock. Simply search for the ETF by its ticker symbol, decide how many shares you want, and click Buy. And voila! You now have a stake in gold without having to store any physical bars or coins. Now, before you rush off to your brokerage account, let's talk benefits and drawbacks. On the upside, gold ETFs offer a convenient and cost-effective way to invest in gold. They eliminate the need for storage and insurance that comes with owning physical gold. What's more, you can buy or sell your shares anytime during market hours, providing liquidity that physical gold often lacks. But it's not all sunshine and rainbows. One of the drawbacks of gold ETFs is that you don't actually own the physical gold. This means if the fund goes under, you're left with nothing. Furthermore, like all investments, gold ETFs come with fees. These may include expense ratios, which cover management and administrative costs and brokerage commissions. Gold ETFs offer a convenient way to have gold exposure without the need to store physical gold. But as with any investment, it's important to do your research. And remember, investment is all about balance. So while gold ETFs can be a great addition to your portfolio, they shouldn't be the only thing in it. Happy investing. Investing in gold can be an effective way to diversify your portfolio and protect against economic downturns. This statement has been echoed throughout our discussion, and it's a point worth repeating. Gold, being a tangible asset, has intrinsic value that's been recognized for centuries. This makes it a powerful hedge against inflation and currency fluctuations. Let's quickly recap the key points we've covered. We began by understanding why gold is a viable investment option, especially in today's economic climate. Gold is not just a shiny metal, it's a store of value, a safe haven asset, and a diversification tool. It's also a way to pass on wealth from one generation to the next, making it an investment choice that has stood the test of time. Next, we delved into the different ways you can invest in this precious metal. From physical gold in the form of bullion bars and coins, to gold exchange-traded funds or ETFs, to gold mining stocks, and even digital gold. Each method has its own pros and cons, and it's crucial to consider which fits your investment strategy and risk tolerance the best. We then walked through the process for each method. Buying physical gold involves choosing a reputable dealer, deciding on the type and weight of gold, and arranging secure storage. Investing in gold ETFs or gold mining stocks is done through a brokerage account, while digital gold can be bought on specific platforms. The process might seem daunting at first, but with careful research and consideration, it can be navigated successfully. Lastly, while gold can be a beneficial addition to your investment portfolio, it's essential to remember that it's not a bulletproof strategy. Just like any other investment, it comes with its own set of risks. These can range from price volatility to storage and security issues for physical gold. Remember, all investments carry risks. It's important to understand these risks and consider your financial goals before diving into the golden world of investing. Because at the end of the day, a well-informed investor is a successful investor.